Osman Sultan, CEO of Do. Great to have you with us on Bloomberg. Welcome to the show.
Thank you.
Let's talk about the quarter. The first quarter you described as being an excellent start to the year. So how did Q2 run for you?
Q2 was actually very strong. It's a continuation. Actually, in some aspects, even better than Q1. And that strength expressed itself on, I would say, all the indicators on the financial results that we released this morning. Mm-hmm. The revenue growth is very decent for the quarter, 2.9%. The EBITDA growth, EBITDA is growing. EBITDA, the earnings before income tax, depreciation, amortization, is growing higher than the revenue growth. Mm-hmm. So that's an indication that we are growing in an efficient manner. That's an indication of the success of the initiatives, efficiency initiatives that we've been rolling out in the past 2 years. And, of course, the net income growth, if I take the net income for the half, that's an illustration, 18%. Well, some would say that's an abnormal type of growth for telcos and the current ecosystems that we are seeing. But we have indicated in the first quarter, and I think it's worth to remind the people who are listening to us and watching us, that we had a one-off exceptional item, a non-recurring exceptional item in the first quarter, which is a reversal of some payment that brought for the first quarter our growth in net income after royalty to 40%. But even without this exceptional the growth would be at a level of close to 4-point-something%, and that we consider as a very decent result.
You talk about the efficiencies, and I just want to see where we are at the halfway mark. You announced $1 billion dirhams worth of savings over 3 years. Is that still the target?
Well, first of all, our indication was to say that this overall program would allow us to reach levels of saving in 2020 of close to 1 billion dirham across what we call all spend of the company: cost of sales, operating expenditures, capital expenditures, OPEX, CAPEX. So we are somehow halfway. We are delivering on this. 2016, 2017, the program. And it is not, saving in the sense, if I may use a metaphor, it's not, well, I'm doing this, spending 10, how can I squeeze it to spend 8 or 9? That's not at all the spirit. If you allow me to elaborate on this, I think that what all telcos are going through is a fundamental change in the behavior of customers. Customers are using our services in a totally different way. Our services are now impacting more and more areas of our daily life. You and I, this is the way digital, the way technology is using. So it's about transforming totally the way our companies are providing service to customers across the entire value chain. This factory, if I may use the word, has to be run and to operate in a different way. Whether the product, the interaction with customers, the organization, the processes, the people, and, of course, the technology.
Well, part of that change and part of the way in which you're going to do business is rolling out 5G. So where are we with that? When will that begin? When will you begin to roll out 5G?
A lot of technological advances are great opportunities for the telco. 5G is one. Internet of Things is another one. The big data story is artificial intelligence, all these buzzwords that we hear around us.
Where do you want to be the winner in that? Where do you want to be the winner in that menu?
These are opportunities. These will require that a whole ecosystem matures. Let me take 5G, because you asked your question on 5G. We will have, in the last quarter of this year, some use cases to show. We will have a very limited, a prototype type rollout of this technology. That doesn't mean that the ecosystem will be there. The ecosystem depends on a lot of players, handset manufacturers, of course, technology providers, standardization organization, etc., etc., etc. So the time, all this has to mature, but I'm expressing an act of faith that 5G will be a great opportunity to change the ecosystem where we are operating and to adapt ourselves to new use cases that, for most of them, we haven't even yet started to imagine.
But the market is going to want to know, what are you going to spend on 5G? Is it $1 billion? Is it $2 billion? What is the capex associated with 5G, for example?
Well, once the entire work is done to assess these entire opportunities, what are the use cases? What is the viability of the business case, the revenue models, etc.? Even the way things will be priced. All this have to be really looked at comprehensively. Then we will come, of course, we are starting to have some element. But I think it will be very premature for any chief exec of any telco to start saying, we know exactly how much we're going to spend. We know exactly how the rollout is going to be. So we will be now, but what I can tell you on 5G, when 4G came and a lot of questions were, are the business case, etc., this country, because of the drive that we have and the leadership vision to be always at the forefront of these technological advances, this country was the first country in the world where you had total country covered in 4G. For 5G, this will be the same. The UAE will most likely be the first country in the world to have the two operators, to have the entire country covered, because this goes along a lot of initiatives that are pushed by the leadership. When we speak about the Dubai Smart City Initiative, when we speak about the Abu Dhabi Vision having a lot of the digital, when we speak about the blockchain initiative that we are seeing, etc., and the organization of the country along this ambition of being at the forefront of digital transformation, of the smart transformation, I feel quite confident that there will be the right business cases that will support for the telcos to move in this direction.
I want to get a sense from you of how the consumer is in the UAE. Your active subscriber number fell by 4%, and on the conference call you said, I don't expect that to reverse. That sounds...
I'm sorry. Maybe I need to correct something. Our number of subscribers was growing and being stable. In parallel, in the second quarter, we energetically put ourselves in conformity with requirements concerning the My Number, My Identity requirements. My Number, My Identity requires customer authentication. This is why I said this number is not relevant for this quarter, because there has been some disconnections, forced disconnection that we did for customers to come. So these customers, for most of them, will be back in the database. The interesting thing is that the spend that we are seeing, as evidenced by first of all, the growth that we are seeing on the total revenue of the company, and the growth that we are seeing more specifically on the home business, the fixed line business, sorry, not only the home, is, in my opinion, a healthy indicator that you have a momentum happening.
Did the World Cup help you in any way?
Yes, for sure. Our entire fixed business has been boosted. I mean, we showed 9.5% growth on that front. Without the seasonality of the World Cup, this would still be at a very decent 7 to 8% growth and on that front.
The royalty payments were 528 million in the second quarter. Those numbers were set a little while ago. What is the risk that the royalties could be up from 15% of revenue and 30% of profits? Is that a real risk for the market to consider?
No, I don't think so. We have been informed about the years and the regime of royalty, and we are implementing this regime as you are mentioned. There is no risk on that front. It has been very clearly stated.
Okay, the Virgin deal which you signed, I'm curious to know, how big could you make that Virgin brand here?
Well, let me, first of all, the Virgin Mobile brand as a B brand for EITC, Emirates Integrated Telecommunication Company, our company, is a way of addressing different needs for different segments. And I think so far, the way customers are reacting, more digital savvy customers, customers that want their interaction to be in that way, through an application, everything being digital, the interaction, it is showing, and the feedback that we get on the customer experience level from that brand are very encouraging. Now, this is still a brand that is starting. We're less than a year, and this is ramping up very nicely. I would like people to understand that we want to keep some competitive space, so allow me not to disclose all the detailed number. That will happen, but while this brand is still building its momentum, we need to keep this competitive space.
Ramping up, is that double-digit growth?
For that brand, when it started, of course. But this is, as I said, this is a brand that has started from zero, less than a year ago. So at this level, nothing to be surprised of. But again, the growth level at this stage is not really relevant.
Okay.
Too early. It's, I think, too early to start talking on that from a financial point of view.
Fine.
Well, let's.
The other discussion in the marketplace is the margins. Market benchmarks you against Eutelsat, and it suggests that your margins are lower than Eutelsat. How do you boost the margins of the business at the moment from the low to mid 40s?
Well, as I said, the efficiency program has been built, and with all the initiatives. And
do you chase a different customer?
Well, first of all, we have had in the last years, our focus was not anymore on market share once the first initial growth happened, but our focus was on the quality of customers more. So to answer your question, yes, absolutely. We are try to target more quality customers. And in addition to this, the efficiency of the entire factory, quote unquote, if I may use this, has been, a lot of initiatives have been there to support this. On the difference in margins, if you benchmark, it's only normal that there are certain ranges of difference between an incumbent player and any challenger in the world. So this is not something that we should be considering, but any CEO of a telco today wouldn't be doing his job if he doesn't have an efficiency program and an efficiency, results on his radar screen, on the top of his radar screen.
Well, the other thing that is on the top of the market's radar screen is foreign ownership of your stock. You'll say to me that it's up to the owners. Let's not worry about the owners. Are you pushing for foreign ownership?
There is no comment from the company at this stage on that front, on this matter.
Has it been discussed at board level?
I don't think it's appropriate for me, as a chief executive, to comment on a matter that is, by nature, a matter that should reserve to the owners of this company and shareholders of this company.
Let's just talk a little bit about strategy for Dubai, because many things have been announced, new visas, trying to make Dubai the destination in conjunction with Abu Dhabi, etc. But to bring more people into Dubai, when you see the strategy announced by His Highness in the past couple of months, how do you think that will transform and add to the growth of Dubai?
Actually, all these measures will have as a consequence to ignite and stimulate the momentum of activity. And as you know, telcos are always, at the heart of this pulse. Mm-hmm. Connectivity becoming today something that is, vital for doing any kind of business or any personal matter, etc. I think that these are all positive things that we hope will translate, or sure will be translating into bigger momentum and into a more energetic dynamic in this country.
One of the big visions for you is beyond connectivity, beyond my fixed line, beyond my mobile, the Internet of Things. You talked about blockchain, etc.
Absolutely.
But try and put this into some kind of context for me, which is how much of your business, if you and I sit down over the next 5 years, how much of your business is going to be beyond connectivity?
Well, it's... we had announced, last year we had given some numbers, and we hope that that will be something that will exceed the 15% of our revenues from almost, very, very little. And to give some context, as you said, it translates into, first, the enterprise space. Within the enterprise space, beyond connectivity means moving from seeing ourselves as a provider of telecom services only to be a provider of end-to-end solutions, from the hosting in data centers to managed services to security layers, cloud services, etc., etc.
Are you prepared to buy businesses? Are you prepared to do acquisitions to enable that strategy?
We have indicated in an answer to a question like that last year when we talked about the strategy that, of course, this type of growth could absolutely be organically and inorganically.
And are you talking to anybody in any particular space about making an acquisition?
I would have not to. If we were doing, you wouldn't expect me.
Well, if you had ambition, if it was hardware or software, let me narrow the field. If you have to do a deal, is it going to be in hardware or software?
I think it's premature and it's not relevant to just focus on one area. You have to look, as I said, end-to-end solutions. You have to look, and these are solutions. So I'm giving you a hint. So these are solutions that you offer to companies. And I listed how this goes, up the chain, from the basic connectivity services to hosting the data, to managing this data, to then offering cloud services, offering security, offering what we call software as a service, platforms as a service. All these have to be encompassed.
Osman Sultan, thank you very much for being with us on Bloomberg.
Thank you for hosting me.